Hello, everybody. How are you all doing today? It's now Sunday, May the 27th. It's about 6 p.m. Central Standard Time, and we're going to talk about Bitcoin. So, not much has happened. I mean, we've been attempting to break the 7,600 range, but, we're just getting shot down every time. And it's been a very lazy weekend thus far, so I haven't really been trading a lot. I made one trade on EOS, the one that I tweeted about for like a $300, $400 profit. And it was for a quick 1% scalp, and that was kind of it. And just so you guys know, for the people that are not following me on Twitter, or you might be a little bit lost in the news, or just haven't been caught up to lately, I've released my Udemy course. So make sure if you guys are interested in it, the link is actually below. And I just made a short video to explain what you guys might be getting and to see if the class is for you. And you are welcome to purchase the course for $190. It's 5% off right now from 200. I was originally going to look for about 340, but I thought that was kind of unreasonable. I mean, I believe that trading should be very accessible and affordable as well. And these 17 classes will be available for you to take on there. And I think it's going to cover a lot of the basics. And you guys are welcome to purchase it with a credit card or with cryptocurrency for the people that are interested. And just to show you guys thus far, the people that have been signing up for it, it's been getting about 200, 300 reviews so far. And the average for this subcategory is around 4.32. And the rating for my class so far is about 4.77, which goes to show that a lot of people are fairly happy with the material that you're getting. I think it'll introduce a lot of the basic concepts in cryptocurrency, and it'll show you how to read indicators from the way that I have traded and what's helped me, I guess, thrive in this trading space so far. A lot of people say that technical indicators are, it's taboo, right? It's not really a good way to be trading, but if you definitely see proof in the pudding there, it can convince you otherwise, right? There's a lot of different ways to trade or invest. You can do it fundamentally as well. But I happen to be a technical analyst, and it's helped me tremendously. So I made this course that's about 18, 19 hours long over 17 videos. And right now, I'm finding a lot of my days, or my time rather, I'm answering a lot of questions basically, right? So when you guys get to me, it's just been a little bit slow lately, or not slow, but busy rather. That's why I've been slow to respond to your questions. But give me about a day or two, and these questions will be responded to within about 24 hours at most. So if you guys are signing up for this class, I would definitely encourage you guys to ask a lot of questions. And for the people that have actually purchased it with cryptocurrency already, just in case I didn't process everything yet, maybe give me a quick message on Twitter there so I can respond to you in a very timely manner. So let's get to this Bitcoin technical analysis and talk about where we left off last time, guys. Last time we talked about this particular zone, right? We were talking about 7620 to about 7650. Keep an eye on that zone. If we actually broke it, there was a good chance to rally to the about 8,000 range. But guess what, guys? We've been trying extremely hard for the past few days, but we just cannot break this right here, as you guys can see, right? Whether it has been seen as a symmetric triangle. So let me actually explain to you guys the mechanics of a symmetric triangle, okay, versus an ascending triangle, right? So it really depends. To each their own, and different eyes can see different things. Would you guys actually have seen this, for example, as an ascending triangle, right? So if you did see it like that, depending on the time frame that you're looking at, let's say a 30-minute chart, right? It can definitely be seen as something that's ascending, where some of these particular regions over here could have been seen as a bull trap region, right? So let's just talk about the mechanics quickly of an ascending triangle. So the reason why an ascending triangle is actually seen as bullish is because we keep making a series of these types of attempts, right? I'm just gonna use Elliott Wave here for convenience. Actually, let me get my drawing toolbars up here. I'm not gonna go over CoinMarketCap, guys. It's pitiful right now. We're still trending around 330 billion, not much of a change. So the reason why an ascending triangle could be considered something as bullish, right, where it breaks out like that, is because it makes a series of attempts at the same high, right? It makes an attempt at the same high, but every time it hits the bottom, it's getting a series of a higher low. And the question is, how many times can this particular region right there defend until it actually gets broken? And I find that not too long, right? So, but what I wanted to warn you guys about is it really depends on the time frame you're looking at where you can create these trend lines, right? So let's say we actually looked at it on a different time frame now, like a 2 hour, where it might look like a symmetric triangle, right? And a symmetric triangle can play out something like that, right? Something like that, perhaps, maybe like that. This looks a little bit more appropriate. So be consistent with the way that you're drawing your trend lines as well, okay? So, oh, you guys don't see it. I'll move it over here. I forgot that the bottom left is not a very good area. So let's just say right here, if you're drawing it like that, okay? You guys hear Luna? She wants to say hi to you guys. So the way that we target a wedge, okay? Actually, let's talk about the mechanics of a symmetric triangle first, okay? So a symmetric triangle is like that, right? Where the supply is pretty much meeting the demand. I'm not a big fan of this color. Let me just change it very quickly. I have no idea how it got to red. Maybe I made an X last time or something. Is it green usually? No, it's not green usually. Is it usually that color? I'm going to keep it white. White looks good. So the question is, which side will win, right? So supply is meeting demand. It's getting a series of a lower high and a higher low, right? So here's the lower highs on the downside, and here is the higher lows on the downside, or sorry, on the upside. But the question is who's going to win, and only one of them does. So what a lot of people do, just as a general rule of thumb, is you take the base range of this wedge, right? Kind of draw a box on there where the EMAs kind of meet, where it makes sense, something like that, okay? And then if it breaks upwards, from regardless of where it is, that's your general target. If it breaks downwards, right? So let's just say this side ends up winning and that breaks up. You take the base range of that wedge and use that as a target. Now, if it breaks down, just as an example, you do the exact same thing, okay? Let's just see if this theory will actually hold true. So let's just say that this ascending triangle clearly didn't even ascend in any way and it wasn't bullish. So let's just say where we take where it makes sense, right? Where the EMAs are right there. I'll just take it kind of in the average range right there, the most relevant EMA to me. Say this one right here, which would be the 21. Okay, and I'm just gonna, if it went up, I would have targeted there. If it went down, I would have targeted something like right there. And what we actually see is that it works out very well, right? So that is the way that we play triangles, okay guys? I'm going to explain to you guys the way that we play triangles, which should definitely help you guys in the future, I think. If it breaks upwards from right here, right? Now, there's two ways that you can set your stop loss, okay? I just want you guys to know right now for the record that I'm a little bit giggly right now because I'm just really baked. I'm sorry to say that like upfront, but yeah, that's why I might not. Am I making a lot of sense right now? I hope I'm making a lot of sense. To me, I've got a lot of things going on in my head right now, but I just can't seem to convey it. Yeah, it's been a while since I've been baked. Okay, I don't want to say it too loud. I feel like the cops are gonna come here right now or something if I say it too loud that I'm baked. Yeah, anyways, you guys are rarely gonna see this side of me, but you know what? It is so beautiful outside. We're talking like a high of 27 degrees. Bitcoin's doing absolutely nothing right now. It's been very boring for the altcoins as well right now, and I'm in such a relaxed mood this weekend that yeah, I just wanted to. So anyways, guys, don't hold me accountable for that, okay? Don't think anything poorly of me like that. Everybody does it once in a while, I'm sure, guys. So anyways, let's do this. So this would have been the risk to reward right here, okay, guys? This risk to reward would have been great. So you have a choice with your stop loss, okay? So try to remember this. You got a choice between setting your stop loss, okay, and being very aggressive with a very tight stop loss, which is basically above or slightly below the resistance, because that now acts as a support, right? What was formerly a resistance will act as a support, and what was formerly a support will act as a resistance. So that's rule number one that you can adopt. And the second one is you take the former resistance or the original resistance and you stick to your stop loss below that, right? There's no really right way to do it. There's no wrong way to do it. It just comes down to what you guys want to do and how aggressive you want to be. Because there could be a throwover. Like, let's say you adopted this one that was formerly the resistance, but now support. What if it went upwards, but it was a throwover and it just broke down? Well, with a tighter stop loss, then you'll have mitigated some losses, right? But what if what if it was a throwover on the downside slightly? Okay, what if it was a throwover on the downside slightly, right? Where it actually broke up a tiny bit, came back down, but it still went back up, right? Or what if it never went up to begin with and it was a throwover down, but you went long anyways? So there's a lot of different circumstances to how you want to adopt your stop loss. But let's say if it goes down, then you can do the exact same thing, right? You can set your stop loss slightly above the original resistance or the former support that now turns resistance, and then you just target down there. So that's kind of a cool way to play it. Like, there's a lot of ways to actually do this. So I think, hold on, let me show you guys a really good example, okay? Yeah, I'm going to show you guys a really good example. Where was it? I think I'll do it on the 2-hour chart. I'll do it on the 2-hour chart, yeah. Yeah, you guys are going to be blown away. It was when it first was released, okay? It was this guy right there. I think you guys have seen me do this many times before, right? Where I took that particular section. Something like that. I can't remember exactly what I did. Yeah, I think it was like something like that. Did I take that one? Okay, it goes something like this, okay? So if you look at this right here, where we're just trying to connect it to an EMA and get a fairly good symmetric triangle, like just somewhere right around there, okay? This is how the kind of the symmetric triangle went to me. Just trying our best to draw it like that, where this is certainly ends up being a symmetric triangle. And I'm trying to cover the EMA right around there, right? Where it is. So if I were to drag this down to right around here, where it broke out, right? And I just trying to draw a line there. We kind of get a pretty good representation of a target in general if it breaks to the downside. Do you guys see what I'm talking about there? Right, I could have done it a lot better, right? But I was kind of giving you guys a basic example of how targets could be when they break out. Or even right here as well, okay? This is a good example where we go on the high side. Actually, let's get not the wick. Let's go like that. Where symmetric triangle breakouts, we just use a basic target like that. It's just a kind of general rule of thumb that has worked out very well for me before, and I just want to share it with you guys as well. So just use a basic target like that, and of course we hit it as a target 1, right? So there's so many different circumstances where we can do it like that as well. Yeah, anyways, just want to show you guys that. Let's get back to over here. So now we broke down, we hit target. That's what I'm trying to get to. Okay, that was kind of what the whole spiel was about, guys. And now we've hit target, and I mentioned that if we broke above 76.20 to 76.50, that there was a chance to rally to 8K. But unfortunately, guys, yeah, nothing like that happened at all, right? And on the bearish view, if we actually broke to the downside instead, I was going to add 25% to my position for short, which was what I was going to do, but I never ended up doing it, guys. I was just away from the computer, right? And then if we break 76.6 or 72.60, I'll add the majority of my position to my short. But we haven't really broken that either, guys, right? So we've attempted to break it, but we keep rebounding from that particular region, and this is kind of acting as a good support right now, right? So that was the low that it needed to break, 72.60, and we broke it by a wick all the way down to about 7,200, but nothing with a lot of clear conviction. So there's really no reason to enter a short right now either. So the sideways continues, guys, right? So based on Elliott wave, now I'm very confused as well with how this wave is going to end up being, okay? So I'm debating between some alternate counts where a little bit more data, and I think it's going to be all right, where that could be an actual 1, 2, 3, 4, 5, and a very powerful one indeed. And now, right, we're still getting waves coming down. And this is kind of a hot mess right now as well. this could be the third wave somewhere coming down. Okay, let's just say we're hypothesizing on a bullish view. Okay, that could be somewhere for the ending fifth wave diagonal. I just don't want to keep it too long. So ending fifth wave diagonal, where that could actually be the fifth wave of the fifth wave of the final wave of the fifth one coming down, right? So what I'm getting to is there could be 5 waves somewhere in here already. That's 3, 4, and these could be the final fifth waves coming down, right? So we're getting an ending fifth wave diagonal within the fifth wave right here. So this would have completed the official ABC, right? Could that have been it? If so, then we might be considered finish the downtrend, right? So I'm just offering you guys like a bullish view, okay? So don't take it at all to heart that that this is what I believe. I still believe we're actually fairly bearish, but the reason why this could be offered as a bullish view as well is because, hey, if this was the original first wave going upwards, right? 786, guys, I've always been saying has been the flavor of the year, right? And that's kind of where we are right now. We're trending right at the 78.6 region, right? But guys, until we break the 786 Fibonacci retracement regions where I'm talking about, right? So this does actually coincide with some confluent reasons to enter a trade. But like I'm just waiting right now for it to break above like 7600. And until it breaks above there, I'm not going to be really too convinced at all that there's going to be a bull run. And if we do break 7600 ranges, 7650, 8K, that's kind of the minimum that I think it's going to get to at first, or sorry, the maximum. So yeah. So you guys get what I'm saying, right? Where this is the ABC, right? This is the fifth wave coming down here. And this one is actually probably going to extend 78.6 as well, I'm guessing. Yeah, pretty much 78.6, like almost, right? So lots of reasons to enter a trade above 7K right now for short-term bullish view. I guess I'll have to take a look at it, right? I would have to treat this as my ending fifth wave diagonal. But I would only add like a little bit to my position there first. Maybe not that much at all. Let's go back to over here, okay? Let's just say I bought some at 7350 range. Then I bought, we're not going to play that much. That's not realistic for this position. Yeah, 5 Bitcoin sounds more reasonable. And I bought more at 7650 breakout, right? And then my average price would be 75.75. I'm pretty cool with that. 75.75, okay. Yeah, I'm definitely cool with that price. Because at least it's going to increase my probability of confirming an uptrend. So I'd rather not enter too prematurely. 75.75. My stop loss now is pretty decent. 75.75. Probably put my stop loss somewhere. Give it ample time. And I'm not 75. Well, it's already getting there, right? So it's already breaking above 76.50. So it's at that price currently right now, but my average would be 75.75. Yeah, so obviously I'm entering because we've entered a confirmation. Oh, we have confirmation, that's why I'm entering. So I probably end up moving my stop to about 7,400. Yeah. Maybe even tighter than that, like at 73.50 for a good 2% roughly. Or sorry, 74.50. Yeah, for about 1.5% loss. And I would target 8K. I would target 8K. And there we go. That's my risk to reward. Yeah, 3.4. I'm okay with this setup, guys. I'm okay for this setup, right? So then in my possible gain, I'm going on 5 Bitcoin. Purchase price is at 75.75. My target one would probably be about 7,900, just on the conservative side. My stop loss is at 74.50. My target two would be about 8,000 on the nose. So I'm okay with this swing position where I'm risking about 1.69%, $640 on a $38,000 position for a max profit of up to 2,100 if it hits my target. And then for my target one, just on the very conservative side, in case it ends up becoming somewhere between a dead cat bounce level and a 0.5 level, probably about $1,609 profit. Yeah, I'm cool with that. On the bullish side, this is my setup. Okay, that is my setup, which I'm going to tweet about. Yeah, so you guys just can't look at my charts, right, and try to understand what's going on. You have to also watch it with the video as well, right? So yeah, that's kind of my dollar cost averaging. So that's on the bullish side. If we break above, still a lot of ways to go though, guys. Still a lot of ways to go. But I don't think this bullish side's going to happen, to be quite honest, guys. Like, I really don't think this is going to be any type of breakout. But you guys always need to be prepared and planned, right? That's kind of what it's going to be about, 3.4. I'm also factoring, I think, maximum fees just in case something happens where I've got a market order. So that's why you see 3.4 on here, but on my Steemit, right? On the actual blog here, you guys see my risk at, oh, it actually is 3.4. Okay, never mind. Formulas are lining up. So this is my bullish view. And then my bearish view is, yeah, it's couldn't even do an Elliott wave count right now in a short little time. So on my bearish view, where we're really not going to hold here, guys, okay? Aside from Elliott wave and talking about price action, we basically just end up trending lower to this trend line right here. Okay, let me give you guys a really good visual representation of this, okay? So here is a trend line that has been established since November 11th, lest we forget, right? You guys would agree with me that this is pretty good the way we're drawing our trend lines. We're accounting for the wick end, right? Just on the extreme side. Makes it, know what I mean? Right? On the extreme side, we're just grazing it with the wick. That's two very valid points. Here, I could fix that a little bit. Probably angle it up. Right? Something like that. And do I also want to accept the other extreme side where perhaps there's a region that we're actually bouncing off of already? Okay, so on one extreme side, which I will make this red right here, are we going to create another wick where we just touch off of it, right? Or are we going to take this region between the white line and the red line as just one of those regions where when it gets close to there or near there, it actually ends up bouncing off of and we're actually there already, right? Do you guys know what I mean? Does that make sense at all? Okay, yeah, so this region here that I'm going to try to just scribble so you guys can see in there, the purple region, we kind of just get there or close to there and we just bounce off of it, right? But the thing is, every time we get into this region, for example, over there, we've bounced off of it, but here we haven't quite yet. So we're adopting some sort of trend line analysis right now. So yes, we have some activity that's punctured it a little bit right now, but we're not talking about the extremes like this right here. So that's why, I might think it might bounce up, but on the bear side, we could easily end up testing around the lower limits of here as well. So we would need to break on the bearish view this major trend line to fall down to pretty low, right? So let's just say we demarcate the zone right here to roughly 7,000. Yeah, okay. So I'm gonna say 7K, pretty hard 7K, guys. Like if we break below 7K, we will certainly test break below 7,000. We'll certainly test 6,500. Yeah, okay. So this is why I think there's a chance to bounce as well. Keep in mind that this white line, right, it could very well act as the trend line support. But at the same time, right, it's a double-edged sword because it could also be just the beginning of the breach point to reach the lower end of that support that I demarcated earlier. So that's scary when you think about it like that, right? Where we could easily break out of that as well. And here's where we test the 6,400 range, right? Like I'm gonna say 6,450 range. 6,450 range first. So, yes, this is the bearish view. And on the bearish view, these subwaves just could not divide into 5 waves. It's so subjective sometimes with Elliott wave that we have to make sure we don't come to rely on it exclusively. It's a great tool to assist us, right? So we have an arsenal of weapons. And always keep in mind that, yes, I love Elliott wave to death and I will absolutely incorporate it into my trading, but it is not the only way that I trade, right? Many other ways as well to trade at the same time. And it's very important to have a diverse set of skill sets when it comes to trading and also adapt. And that's what I definitely try to show you guys in my classes, as you guys probably know already if you sign up. But on the bear side, right, where this simply did not divide into 5 subwaves, for all we know, that could just be the first set of massive subwaves coming down, right? Where we just keep going down very, very, very far. And then there's the opposite arguments as well, where people are saying these are subdividings into A, B, C, D, E's, as in 333, 33 subwaves as well, right? So there's so many different controversial points and alternate wave counts for Elliott wave as well right now, that I'm more so sticking to traditional methods right now. And sometimes, guys, the simplest ways to do technical analysis is actually just to do trendline analysis. Not trendline, but stick to the very basics, right? So this is the very bearish view that I don't like to offer, but we got to make sure that we plan, right? Bearish view. So yeah, that's the recent interim swing low, right? If we look at on a 4-hour chart as well right now. I'm just going to post this to my Steemit. All right. Okay, guys. So what do you guys think that we're going to end up getting? I think that we're going to end up getting into fairly scary next few days soon. There's not really a lot of direction right now, guys. We just got to wait for breakpoints, right? We just got to keep waiting for breaks. Like the next break is clearly below the 7650 range. Right here, 7200 to 7260 range. These are some resistances or supports right now that just need to break down. Some people are drawing trend lines like that, calling this like an ending fifth wave diagonal for the whole thing. Nah, I can't really call it like an ending diagonal or a channel or anything like that for the whole structure, only within that one structure that I talked about earlier. On the daily, guys, we're finally getting some sort of doji support right now, right? This is a fairly weak candle in terms of 24-hour volume, okay? Very, 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 very weak, guys. So not really much of volume today at all. The MACD just doesn't look like it's ready to curve upwards, right? It might start to bullishly converge, but in terms of actually bullishly like diverging above the histogram or on the positive side, it's really far from there if you guys notice, right? Like we got to tick upwards today because we're getting this doji, but there's really no signs of positive bullish momentum yet, okay? There's no signs of anything at all, nothing at all. Like if we got the same low, right? We got the same low around here, and then but we got actually had this RSI. That would be a really good sign. But because this is actually a higher low than it already, of course, this RSI is going to naturally give us a different momentum. Yeah, here we're gaining RSI, right? Like, sure, we're gaining it, but it's so choppy right now that's very difficult for me to say that we have any bullish momentum, right? Here, entering a position is all just chance. It's all just risks taking, right? And just hoping for the best. Okay, let me give you guys some perspective, okay, of how bearish this is right now. Like on the 5-minute time frame, yes, we look like we're about to cross over in golden crossover, but every time we get anywhere upwards, we're getting rejected with some massive wicks, right? Even on a 5-minute time frame. On a 1 hour or 15-minute chart, we're trending well below the 200 EMA, right? Well below. On the 30-minute chart, we're trending below the 55 and the 200 EMA. On the 45-minute chart, same thing. On the 1 hour chart, same thing. On the 2 hour chart, same thing. 3 hour chart, 4 hour chart, daily chart, all the same thing. We're in a short-term bear market right now. There's no denying that whatsoever, guys. I'm sorry to say, right? But as much as we would like to accept the bullish view, if we cannot maintain some sort of T line on a long moving average, okay, like a T line. Okay, think of a T, right? Think of a T, just a T going across, right? Sometimes we use the term T line to gauge a long horizontal moving average okay, a long horizontal moving average where it trends above or below it. And this is clearly below the T line, right? So, yeah, I mean, like the moment that we break above some short-term EMAs, like right now, we're trying really hard to break even above the 55 EMA, not a 15-minute chart, but nothing's happening, right? Every time we get close, like take a look right here, right? Every time we get close, guys, to try to break above the 7,600 range, we tried very hard to sustain above it. But look what happens, guys. The bears really, really, really want to drive this down right now, guys. See? See how you were able to tell? It was very easy to tell that this was going to drop, okay? First of all, this was a signal. Bam, pop. It tries to go upwards, right? It keeps getting rejected. Every time it wants to go up, it gets rejected, right? And there's so much bearish pressure to go down. And you guys know what gave it away? This right here of a rejection, it's not even much. Okay, guys, it's not even much. It's $62. But the fact that they're having a lot of trouble staying above the 200 and the 55 EMA with that very last long wick, guys, okay, you would have zoomed into a lower time frame after that all happened. Okay, you would have zoomed into a lower time frame. And honestly, the moment that you saw it dip right below there, just like that, and the moment that this candle formed, bam, that was basically a signal that the bulls were losing the race. Yeah, guys, right? Because you see a rejection to the upside, right? The bears reject them with the wick. You're starting to see this price action of volume just selling off, right? Slow volume, but it completely trends below the 55 EMA. And then all of a sudden, this big drop. So, of course, you'd be late to the party, right, to short it. But, like, I wouldn't have noticed until this candle formed either and until this volume picked up. But if I was in a long position, that definitely would have triggered my stop loss, okay? Definitely would have triggered my stop loss, my mental stop loss, because I would have said to myself, okay, I'm minimizing my losses right now. I'm going to get out of this trade even before it hits my stop loss because that volume and that candle price action was very indicative. So now we're trying on a 5-minute chart to get above it. Nothing's happening, guys. I'm sorry to say. Until we break above 7650 or below 7200 ranges, there's nothing that we can really do except for sit here and just wait, guys. I'm sorry. So other than that, yeah. How long did I go in this video? Not that long, 20 minutes. It's actually fun to do technical analysis when you're baked. Anyways, I'm a big advocate of that. Keep in mind, I'm Canadian, all right? So we're not going to get into the debates about the pros and the cons of smoking weed. But anyways, but I'm always myself with you guys, you know? I'm not going to pretend who I am. I'm not going to lie about who I am or change who I am just because I'm whatever making videos and you guys see me. I'm always going to be me. So anyways, yeah, I hope you guys have a great day and guys just watch out for those zones, right? Bullish run perhaps above 7650ish, those ranges. Bearish drop below 7200 to 7250 ranges. And don't forget once again guys that the link to sign up for my courses and there's a lot of material on there guys. There's also if you guys don't know, the last video is the best one. Okay, let me just show you guys it very quickly. Okay, let me just show you it super quickly. The last one is the best one because it's like 17 hours, right? Or sorry, not 17 hours. It's like 2 hours of video of this one right here. This one's kind of cool, right? How I make use of RSI and actually make immense profit. I think I took 16 live trades there. Yeah, 16. And I actually only broke even on one of them and I won the other 15. And I think I was up about $2,000 on there. So they're very good live trades following pretty much the exact same strategy. So this whole thing, guys, like, you know, you cover everything from the beginning. So if you're a beginner, like you cover over, you know, all the class terminologies and stuff like that. And the second one is we go over the basics, like why are some people much better at trading and not as others, right? And we talk about things like emotions and risk management, right? We talk about dollar cost averaging. Some videos are a little shorter than others. This one's a fairly longer one, right? Reading level 2 order book, understanding bids and asks. It's kind of one of my favorite momentum changes. Then we talk about things like what is longing, what is long shorting, what is margin trading, what are the risks, etc. We talk about charts. It's just generally how to customize it as well from the very beginning. So we talk about how to customize and add indicators. Um, yeah, then it goes from very easy to very hard. Okay, just so you guys know. But by the time you're done these classes, you should have a pretty good gauge of what I'm talking about in all of my videos, firstly, and secondly, you should have a little bit of experience now to start playing very small in the market, right? So make sure you're always playing smaller amounts, not bigger amounts, right? Because we want to go for these valuable learning experiences, and we don't just want to dive right in and play as much as we can and think that, hey, um, I need to play a lot of money to make a lot of money. That's completely wrong, guys. You guys got to make sure you're playing to make good trades, to gain valuable experiences and lessons under your belt, and then the profits will eventually come in. And that's what I try to teach you guys throughout these 17 lessons of mine as well, right? And we talk about some very, very complicated stuff as well that we get into. But to breakout strategy, like this one's phenomenal. It's super high rated right now with reviews. This one here is great as well. The swing strategy, where we're identifying bull and bear markets and how to add 55 and 200 death cross and golden crossover strategies. This one actually got really long because I love histogram. As you guys know, we talk about the MACD and histogram and how to add moving averages as well. And all of these are strategies basically, right? So from lessons, I think 11, 12, 13, 14, 15, 16, and 17, they're the ones that just accelerate in terms of difficulty compared to the ones at the beginning, where you'll probably take the most away from. Anyways, I hope to see a lot of you guys sign up if you haven't already. The link is in below, and it will send you to my Steemit blog to give you guys a quick idea of how to sign up for the course. So thank you very much for watching my video, guys, and keep in mind once again, a break below 7250, keep an eye on it. 7200, we're going to be kind of watching, okay? It's going to be very scary. And if we break below those to 7K, and that does not hold, we'll simply drop to 7450 ranges. That's the interim swing low. And then if we break above on the bullish side, anywhere between 7620 and 7650, we could have a rally with a really good risk to reward ratio as well, all the way to 8K. So with that, have yourselves a great day, guys, and thank you very much for watching this video, and always for the love and the support. Bye now. Take care.